Consumer sentiment can indicate potentially what consumer spending will be like, and that will affect ultimately companies' bottom lines. However, just because consumer sentiment is down, historically has shown it doesn't necessarily result in consumer behavior changing. Good morning and welcome to Life in the Markets. My name is Stephen Rohr and I'm a wealth manager at the Life Financial Group. Last week, the market was positive by the end, but consumers were not. The major indexes performed rather like thoroughbreds in the Grand National steeplechase race. Steady progress throughout with a big jump in the middle. The S&P 500 closed up 3.56%. The Nasdaq was up 4.45%. The Russell 2000 small cap up 4.14%. International was up 4.27%. Much of this came on Wednesday when there was a big leap, as you can see in some of the charts showing. The only major item in the red last week was oil, which was down about 15%. This was all good news, and it was mostly related to the two-week ceasefire of sorts announced between the U.S. and Iran. While this ceasefire has not resulted in a peaceful Middle East, it did encourage investors that the Strait of Hormuz blockade was nearing the end. However, after this weekend's negotiations fell through, Trump announced that the blockade is back on and enforced by the U.S. Navy because we don't want Iran to profit from levying a toll of the shipping passing by. Several consumer sentiment reports also came out last week and showed that the average American was feeling the effects of inflated gasoline and oil prices and was therefore not hopeful that these effects would be easily undone. In fact, the University of Michigan's consumer confidence level dropped to the lowest it's been since the 1970s. The current level of 47.6 is a significant drop from the pre-Iran war level of 56.6. The number of consumers who blamed high prices for poor personal finances also jumped from 47% to over 54%. Consumers' expectations for inflation also turned sour. They were starting to think that inflation would come down, but unfortunately, with the war and the rise in oil prices, their expectations went up. In fact, they jumped up from 3.8% to 4.8% for the year ahead. So the CPI report for March came out, and inflation, particularly including fuel, it did go up by almost 1%, 0.9%. That is very substantial. In fact, the last time there was a bigger jump was back in 2022. Much of this was driven by a 21% increase in the price of oil. For instance, if you take food and fuel out, and that gives you what's called the core CPI, it did not even go up as much as expected. It only rose 0.2% month over month, as opposed to the 0.3% that was forecasted. Now, of course, as we've been saying, the longer the oil prices stay elevated and this conflict continues, the more of an effect it will have down the line on the prices of goods, because the price of shipping those goods and transporting them has a lagging effect on the actual end price to the consumer. The difference between the market's outlook and the consumer's sentiment is that, generally speaking, the consumer's sentiment tends to be more of a how have you felt lately and what was this past month like for you. It tends to be a little more of a backward looking, whereas the market is much more looking to the future. What are the earnings? What are the baseline for the companies looking like? So they're not exactly going to be reading or looking for the same thing. However, consumer sentiment can indicate potentially what consumer spending will be like, and that will affect ultimately companies' bottom lines. However, just because consumer sentiment is down, historically has shown it doesn't necessarily result in consumer behavior changing. Often enough, consumers' behavior does not align with their sentiment, one way or the other. Now, what can we expect in the week to come? Of course, much of this depends on what happens with the Strait of Hormuz and the negotiations, and how much the firing will cease or not cease. The CPI report showed that prices have gone up, primarily in regards to fuel. But the market knew this already, and it was mostly priced in. However, with the new round of blockades, the market is going to respond to that, and oil has already jumped, as of this morning, to over $104 a barrel. So what should we do? Well, we should learn from this week. If you had gotten out of the market a week and a half ago, you would have missed a significant rebound last week, particularly on Wednesday. Who could have said that the market would go up and keep going up this past week with a major jump to boot? Not I. Trying to time the market is like trying to guess which runner in a foot race is going to trip and at exactly which inch. So stay invested and remain focused on the big picture. This is why we are encouraging, particularly during this period of volatility, to have a strong position in value companies. Companies that have strong bottom lines, excellent balance sheets, good history of paying dividends, and are in an industry and a position within their segment that gives them a good standing, whether or not the market is up or down, or whether the economy is doing well or not. Focus on the fundamentals, not the fear-mongering. In the Hall of Faith passage in Hebrews 11, the author points out examples of believers all through history who have walked by faith and kept their eyes on the end goal. While investing is not our spiritual walk or run, it is a discipline. We, as investors, must also keep our mind fixed on the end goal, not the current ups and downs of the race. Are we going in the right direction and for the right reason? That is the question we must ask ourselves, and not just about our investing. With that question to reflect on, let us close with Hebrews 12, 1-2. Therefore, since we are surrounded by so great a cloud of witnesses, let us also lay aside every weight and sin which clings so closely, and let us run with endurance the race that is set before us, looking to Jesus, the founder and perfecter of our faith, who for the joy that was set before him endured the cross, despising the shame, and is seated at the right hand of the throne of God. We hope you have a wonderful week ahead. We look forward to joining with you next week. Please like and share. We'll talk to you soon.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.